Now I want to move on to a story in investment news, which talks about a warning by Goldman Sachs that the BRIC countries, Brazil, Russia, India, and China, that they are starting to peak. And there might be some downside along the way. Now, the reason I bring this story up is not so much to make a comment on the BRIC countries. It's more so to address the fact that when companies like Goldman Sachs put out guidance publicly like this, investors have to remember that Goldman Sachs has no incentive to go out in the market and give people valuable, actionable investment advice or even valuable research, because these things take a lot of money, a lot of effort to produce. And when you're in investments, the advantage comes when you have information that other market participants don't have. So a lot of people these days are relying on analysts. They call themselves also consultants, pundits. Basically, they have every name under the sun. They come from prominent investment banks, and they go out in public and they start making these assessments and telling people that they see the market going one way or the other way. Some of these guys are on CNBC, MSNBC. They're giving people opinion as to where the market's going to go. And the real thing that investors have to be mindful of is what potential conflicts of interest do these people have, especially if they're from an institution like an investment bank and they're out there telling people that the market is going to go one way or the other. You really have to be critical of that and say, okay, who are they benefiting? Who are they working for? And is this particular institution simply trying to get investors to perform a certain way so that the investment bank's investments perform a certain way? That's something to be very aware of, especially in this time. We have 24-hour news networks that talk about financial news exclusively. They'll have the talking heads, 4 people on the screen arguing with each other, trying to get their viewpoint across. And it's never really addressed as to what reasons they have for actually coming on television and putting their opinion out there. I actually covered this topic in an article that I put out called Top 5 Reasons Financial News Won't Help You Invest. It's available on my website, athelonwealth.com, in the knowledge section. Now, of course, the issue isn't that they're out there putting out their viewpoint. The problem is that investors tend to take this as investment advice, whether or not that was the intended goal. So when a columnist writes that, for example, the BRIC countries are going to go down, the people tend to get nervous, people tend to redeem out of those funds, and it has a real effect on people's portfolios. So the people putting this information out there really don't have anything to gain or lose whether their advice is correct or not. So that's just something to keep in mind. One of the other things that this constant media attention to the financial markets brings on is a certain mentality by investors that they need to jump in and out of investments very often, and any new rumor or new piece of news is a reason to buy or sell. Now, the thing is, if people want to trade actively and they have the capacity and the knowledge to do that, that's great. There's nothing essentially wrong with it. The thing is, when you start trading in and out of positions, you become more of a gambler than an investor. This is especially applicable for the average Joe. I mean, there are a lot of astute investors who day trade and trade actively and will probably make a lot of money. And this doesn't necessarily pertain to them. But for the average person, it can be quite dangerous. It says, as we do not constantly check the price of our house, car, or jewelry every minute of every day and rush out to buy or sell these assets as soon as their price changes by a few percentage points, why do we apply this sentiment to the financial instruments that we hold? And it raised the perspective that a share of stock is a lottery ticket. And nothing could be further from the truth. If you buy a share of stock, you're a partial owner of that company. Okay? And it really comes down to what the company is going to produce over time, what the management is going to be able to do for you. As far as the news coming out, these news stations, they're led by ratings, and they have an incentive, of course, to keep you watching. So anything that they put out, there's going to be sensationalized. It's going to be as dramatic as possible to make sure that you stay interested. Also, the fact is, when we have financial commentators and they'll interview CEOs and they'll claim to ask all the right questions, the thing is, if a news correspondent asks a wrong question to management of a company, they're simply not going to have access to that person in the future. And to risk that, especially when you have a CEO of a prominent organization speaking with you, is very dangerous, and I think very few reporters would put themselves in that position. So that's just a little bit of background info on the biases that can exist and what to watch out for.